My name is Javier Zuniga. Jay Wadsworth and I will be explaining some of the background information and issues associated with some potential and very often overlooked tax strategies. In the first part of the webinar, we will address the research and development tax credit process. The second part will provide information as to the benefits that can be derived from cost segregation. Offers some of the most advantageous research and development tax incentives. Unfortunately, these tax credits are perceived by some companies as either too cumbersome or too costly to implement. Companies that qualify for the credit can deduct 20% of qualified research expenditures, which obviously we'll get a little bit deeper into as we proceed. It is with great pleasure that I now introduce Jay Wadsworth. Jay is one of our shareholders. He is also our tax department director and has extensive experience with the R&D credit process. Hi, Jay.
Hi. Thank you, Javi. And let's talk about the four components of the R&D tax credit. And this is what got changed in the 2003 and 2001 Acts, which opened it up for most small businesses that can be used today. There are basically four things you must meet in order to take the R&D credit, which are listed here on this slide. First, it must be a new or improved business component, and we're going to talk a little bit in more detail of what that is. But basically, what this involves is either you've got to be coming up with a new product, or you need to be improving your product. It doesn't have to be completely new. You need to be either changing your product, making it better, making it faster, making it stronger, making it cheaper, changing the process that you are working on it with. Maybe you're changing your automation. That also is considered in that number one. So that's actually a fairly easy test to meet. Number two, it must be technological in nature. What this means is it must be in a hard science or a computer science, chemistry, physics, engineering, and computer sciences. Unfortunately, what it does not include any social sciences. It doesn't include marketing and that type of thing. So you can't go out and do a study on what your customers would like. That unfortunately doesn't count. The third and the fourth we'll kind of talk about together because they're similar. The elimination of uncertainty in the process of experimentation. This is kind of going back to the old scientific method. You have a hypothesis and you're testing it. These two standards actually are really where the things change in the 2001 and 2003 Acts. Previous to those Acts, basically what the standard meant was that you must have been improving basically the scientific knowledge for everybody to meet this test. You had to prove that this was something that was not known by anybody. Now what number 3 and number 4 means is basically that you don't know the answer. You may have a competitor that's already eliminated his uncertainty in creating product. Maybe you're creating something very similar, but you don't know the answer. So when you kind of look at these four standards, basically the way it's now been written is that anybody that's in manufacturing, you're a software developer, you're in engineering, developing products, you're going to qualify for the credit in some way. You are going to meet these four if you're in these areas.
As far as the cost segregation studies, cost segregation is a strategic tax savings tool that allows companies or individuals who have built, purchased, expanded, or remodeled real estate to increase cash flow and return on investment with accelerated depreciation. What it does is it provides a method for dissecting construction costs that are usually depreciated over 39 years. Now, what the cost segregation does is it reduces the tax lives. Therefore, accelerated depreciation will improve the cash flow by reducing the income tax. The process will involve a study of your property by breaking down your assets into 4 categories: personal property, land improvements, and buildings. This will then be evaluated to see how much can actually be saved and deducted on your property. In closing, we have shared with you the advantages of the R&D tax credit. We have also briefly touched upon some advantages associated with the cost segregation studies.